In this Track and Trade High Finance Trading Training video, I want to talk to you about indicators. Now, indicators can be one of the most powerful tools that we have available to us. Yet they can cause us some of the biggest problems and cause us to lose some of the largest amounts of money if we're not careful. Indicators have specific purposes, each one individually. Now, they're all derived from a different mathematical formula, so they each one perform differently on different parts of the market. Now, in Track and Trade, we have a number of different indicators. Basically, most of the indicators that show up down here in the bottom window follow a basic fundamental strategy, and I want to highlight that for you right now. The indicator that you're seeing down here, of course, is the volume indicator, and I want to switch over to a different indicator. This indicator that I want to talk about is called the stochastics indicator. Now, the reason I chose the stochastics indicator, and on this one I'm just going to remove this. So we have the stochastics indicator listed here in the bottom window. Now, stochastics is a classic indicator that is based on the overbought and oversold region of the market. And this is very traditional among most indicators that run down here in the bottom window. And if we come over here to the left window, you'll notice that what I did is I clicked on the indicator itself, and of course that brought up the properties for this indicator. Now, if I click out here on the chart, it takes me back to the chart properties, but I want the indicator properties, so I click on the indicator, and as long as I'm on this tab right here, you'll notice that the indicator properties pop up. And it doesn't matter which indicator I have. If I have 3 or 4 indicators stacked here, whichever one I click on will bring me the properties to that indicator. So now I'm going to come in here and I'm going to turn on a couple of thresholds of this indicator, and you'll notice that this threshold is set at 80%. And you notice that's the top of the window, or 80% of the top window, and 20% or 20% of the bottom window. Now, the way this indicator works to help us know whether we're buying or selling, or whether the market is in what we call an overbought or an oversold region, is this way right here. Let's come through here. Now, the upper region up here above 80 is considered the overbought region. So I'm going to label that as the overbought region. The lower region down here in the bottom, this is known as the oversold region. So we have an oversold and an overbought region. Now, what that means is that whenever these moving average lines down here, based on this stochastic indicator, reach up into the overbought region and then cross over, these two lines cross over, this is an indication that the market is going to change direction from overbought to oversold. So you can line these up and you can see right here, this is an oversold region, and sorry about that, my arrow's backwards. This is the oversold region. You see the market's coming down into the bottom side of this, and it corresponds to the stochastics oversold region down here. And so as this market comes down, you can anticipate a change in direction as the market comes down into this oversold region, and that's exactly what we saw right here in the AUD-USD contract. And now as this market, as you see, comes up here and goes up into the overbought region, you anticipate a change in direction from the overbought region to come back into the oversold region, and you see a correction in the market. And so again, that's what we saw in this market. Now again, one more time, the market came down, or the indicator came down into the oversold region, and then when it pops back out, we anticipate a change from the oversold region back towards the overbought region, which is then reflected back up here in the market. And so you can see how this is helpful for you in trading. Now with Track and Trade, of course, we can go back in time and we can look at this, how it changed as it progressed. So if we come back to this point in time, we can see that the market, and I'm going to get a little bit better scaling here for you. You can see that the market came down, and as it comes down, we step the market forward. We can see that it's coming down into the oversold region. So we're starting to anticipate a change in direction as this market reaches down into the oversold region. So see how that reaches down into the oversold region? Now, we can get an actual arrow, or we can actually get a buy signal from the indicator as well. Not just a direction in trend or a trend direction. We can also get an actual signal saying that the market has changed directions. Now, when that market crosses right there, see how the green is crossing the blue line? And we make a confirmation that green is crossing the blue line. As long as that crossover took place below the 20%, that is considered a buy signal. So at this point, we got a confirmation, we got a buy signal right here on this market. Okay? Now, Track and Trade has the ability of actually pointing these out to you. Now, you have to be careful because sometimes, like in this case right over here, you'll get multiple crossovers down underneath the 20% region, which gives you multiple buy signals. So you can't just look at the arrows all by themselves. You have to look at them in context with the overall trend, which is why I wanted to point the overall trend and the concept of the indicator out before I ever show you the little arrows, because people get lost with the arrows. They think that the arrows mean that they're supposed to buy every time they get a buy arrow and sell every time they get a sell arrow. That's not the case. Indicators have weaknesses in them as well as strengths. One of the weaknesses of the stochastics indicator and many indicators, and most of them again will follow this basic rule of thumb right here. When these cross over, sometimes you get multiple crossovers down here in the bottom region, so you'll get multiple arrows, and this is confusing to people. So let me come over here though, and I'll show you in Track and Trade. We actually, when those two lines cross down below the 20%, we're gonna pop a little arrow up on the chart for you so you can see that. And that's over here in the stochastic settings. You can come down here and see where it says buy sell arrows. Right now it currently says not displayed. But if we come in here and we say, okay, now they're displayed, you'll notice that we now have a little arrow. And this little arrow indicated that we had a crossover of the blue and green lines down here in the oversold region. Now notice up here that we got two arrows. Well, why did we get two arrows? We got two arrows because we had multiple crossovers down here in this line. Now what we do with stochastics is we do a mathematical calculation based on the price itself. So as the price moves forward and back, it causes these lines to move forward and back. And once it gets down into the oversold region, and they cross back and forth a couple of times, you're going to get a couple of different arrows. But you have to remember that you have to also look at this in the context of what's happening. This market is coming down. It's down in the oversold region. It popped back up out of the oversold region into the neutral region, and then it turned around and come back down again. And you'll notice how the peaks and the valleys correspond with the indicator. So we have a peak here. We also have a peak here. And that's the way this indicator works. But when it gets down too far into the oversold region and crosses over, that's when we get this little arrow right here. Now let's progress forward a little bit more. And as we watch and we see that these two lines are now coming up into the overbought region, notice how they come up into the overbought region, and we now have a sell arrow. Now, don't really think about this as so much as a sell arrow, as it's just an indication that the market has changed from oversold to overbought. And whenever we have it overbought, think about the 50% line in here. If you wanted to, you could even come in here and set one at 50%. Think of that 50% line. Let's change the color. Let's change it to a green or something. Maybe something we can see a little bit easier than green. There's a salmon color. Let's call that a rubber band, okay? And so now these lines are always being pulled towards the rubber band, and then as they swing down into the oversold region, they're pulled back to the 50% level like a rubber band. And they're just going to cross back and forth because markets have a tendency to move in waves, right? 2 steps forward, 3 steps back, 2 steps forward, 1 step back. They move in waves. Okay, and as they do that, this market moves in waves back and forth across this line. And as they reach down into the oversold region, we look for an area for the market to retrace. As it reaches up into the overbought region, we look for the market to retrace. As long as it's in this moving through this neutral region here, we're in a trend. So that's our trend. And so if you look at the indicators from that standpoint, and not always try and look at these as buy-sell arrows and think that I have to get in because I have a sell arrow, or that I have to get in because I have a buy arrow, that's not the point. Let's go through and continue. And this is the reason why. What happens is we have sometimes where, because this is based on a 0 to 100 scale, notice it's 0 to 100 scale, this market can continue higher even though the stochastics indicator has already reached up into the overbought region. So the market can actually continue higher. Now, if you watch and wait for these lines to actually cross up in here, you're going to get the arrow, which we just received up here. It was kind of off the screen, so I brought it back on the screen. But you got your arrow because you got another crossover up here, right? But watch for this market to actually enter back into the neutral zone. We got another crossover, so we got another arrow. So that's what starts confusing people. They're like, I'm getting multiple arrows, I'm getting multiple arrows. Well, don't look at it as an arrow to sell. Look at it as an indication that this market is just wiggling up here in the overbought region and is getting nervous, and it's got to have at some point a retracement and come back down into the neutral area and down into the oversold region. So this is giving you an opportunity to place stop orders or entries orders to go short on the market. And as this market comes down, now as it enters back into the neutral zone right here, if you look at this indicator and you say, okay, these two lines are now entering back into the neutral zone, it's probably a better confirmation that the market's going to drop in price than all these little crossover arrows that are up in here, up in this region. Okay, if you watch when it actually enters back into the neutral zone, these are probably going to be better times for you to be looking for the arrows or the crossovers than it is back here in the earlier times back here where you're just getting crossovers up in the overbought region, which triggers the software to throw up a little signal for you. And as you notice, as it starts to drop back into the region, it's going to start to follow, and the market's going to do the same thing. It's going to continue down in the downtrend. Now that's a good explanation of how we use the overbought and oversold indicators within Track and Trade. There are a number of overbought and oversold indicators in Track and Trade. And as you come down here and go through the Add Indicators window and you go down and you turn them all on and off, you'll find that a number of these are overbought and oversold indicators. And you'll know that by looking at the different settings over here and noticing the thresholds and what the rules are for those thresholds.